What's up guys, it's Nathan here. In the wake of the Reserve Bank's decision to increase the official cash rate to its highest level in 11 years, banks have started to increase mortgage rates once more. NAB, National Australia Bank, is the first bank to declare its increase in the official mortgage rates following the Reserve Bank's most recent decision. The Reserve Bank of Australia took markets by surprise on Tuesday when it announced it would raise the official cash rate by 25 basis points, bringing the official cash rate to 3.85%, which is the highest level in over a decade. This decision comes after temporary halt in the cash rate in April's meeting, which was an assertive approach out of 10 consecutive rate rises we've seen, which effectively is aimed to combat inflation, which is well above the current target range of 2 to 3%. NAB disclosed on Wednesday afternoon that it would raise its standard variable rate home loan by a further 25 basis points effective from May 12th. Additionally, the bank will increase its savings rates effective from the same date. If you find value in this video, please consider hitting that subscribe button as it really helps out the channel, and a big thank you to all our subscribers for your support. Inspires us to create more content we hope you enjoy. NAB's Group Executive Personal Banking, Rachel Slade, stated that the Reserve Bank's April pause on the cash rate provided Australians with much required respite after enduring 10 consecutive rate rises. She acknowledges that some customers are concerned about their financial situation due to the cash rate increases and assured that the bank is ready to offer assistance. Now, there are things you can do if you have a mortgage, and here are 3 tips that might help you if you are finding it difficult or these rate rises that you've seen are certainly starting to take a bite. The first is negotiate with your lender. Reach out with your current lender and discuss your concerns about the interest rates and where you're at. They might be willing to negotiate a lower rate to keep you as a customer, especially if you have a good repayment history and credit score. Be prepared. You might need to provide other competitors' offers in order them to really match that deal. Now, we have seen a huge differential between existing customers that have loans and new customers. They're saying there's about a 0.5% difference. So if you've had your loan for 12 months, even 6 months, or any longer than that, you will find that you might actually be paying 0.5% more than what the banks are open and willing to give you. So definitely worth, number one, talking with your lender and seeing what you can do. The second is, if your bank doesn't want to play ball, consider refinancing. And refinancing really involves replacing your current mortgage that you have with a new one, which often means that you'll get better terms and lower interest rates. Working with a broker like ourselves here at Galloway, we'll shop around, compare different lending options with you, and find the one that's going to make the most sense. You do need to consider other associated costs with refinancing, such as application fees, potential early termination fees if you are fixed in. But in a lot of cases, banks are giving us fixed refinance rebates at the moment. So yes, there might be, for example, $1,000 to move. However, the new lender is also offering potentially a cashback. $4,000 isn't uncommon at the moment. So it might cost you $1,000 to move. You'll get $4,000, which is really a cash injection. You can do anything you like with that money. I had a client who used the $4,000 rebate they got from a lender, $1,000 to effectively pay for their costs, and then $3,000 for a trip that they had planned to go to New Zealand that they'd always wanted to do. That $3,000 made a big difference because it paid for their flights. So guys, if you do need assistance with the second option, which is refinancing, get in touch with us at huntergalloway.com.au, fill in a contact form, call us on 1300 088 065. We can do a free assessment, look at your situation, and best of all, when you work with a mortgage broker like ourselves, there's no cost for the service, so we can get you in a better position and see where we're at. You do need to be careful because there's been so many rate rises, the ability to refinance, you do get reassessed. So in some instances, if the borrowing potential has gone down, that's where we can double check that before we do anything to ensure you still qualify for a loan, because you still need to qualify based on the updated criteria that the banks have. Now, the other option is to consider a fixed rate mortgage. So if you are concerned about rates continuing to increase, you might consider switching from your variable rate that you're on to a fixed rate mortgage. A fixed rate mortgage allows you to lock in the interest rate for a term, so typically anywhere from 1 to 5 years, and will provide you more predictability and allow you to protect against any future rate rises. You do need to keep in mind that fixed rates can sometimes be higher than variable rates initially, but it could save you money in the long run, especially if the Reserve Bank continues to raise the rate. So there are 3 things to consider if you are finding yourself in a bit of a pickle, especially with the amount of rate rises we've seen. Now, NAB has also offered support services that are available to customers that are worried about their financial position to effectively discuss options which might be able to put assistance in place, such as pausing repayments, looking at putting you on interest only, or other alternative options. So if you are struggling and you find that those 3 options we just talked about aren't available to you, talk to your bank. Don't get yourself in a situation where you don't let the bank know your terms, your problems, because that's when things can go awry. So definitely worthwhile making sure that your communication lines are very much open with the bank and they can help you through any circumstances that you might be going through. Now, the Reserve Bank Governor, Philip Lowe, explained that rate hikes were necessary to effectively bring inflation back down to the target level, which is 2 to 3%. He said that the RBA's top priority is this one thing, which is bringing inflation down. Although inflation is really slightly increased in the March quarter, Australia, the consumer price index in Australia still remains at a disconcerting 7%. Dr. Lowe stated that his monthly report in the Australian inflation has reached its peak, so they do feel that we've hit the peak, but at 7%, it still remains too high. He noted it will take some time before inflation returns within the target range, and thus the board deemed it was necessary and appropriate to implement another rate rise this month. Factors that contribute to interest rate hikes on Tuesday included elevated services inflation and Australia's tight labour market. Despite productivity growth, increasing labour costs have persisted. Dr. Lowe also cautioned that additional tightening might be required, implying potentially there could be hardship for households that are already grappling with the elevated cost of living pressures. And Treasurer Jim Chambers acknowledged that the RBA's unexpected decision to raise rates this month would be difficult for many Australians. However, he refused to be drawn into the Greens demanding for the government to override the most recent rate increase. Greens leader Adam Bandit argued, on Wednesday that the government had an opportunity to alleviate the burden on Australians already struggling due to 11 straight rate increases. While admitting on Tuesday the decision, which caught the market off guard, was pretty blunt and pretty brutal, Dr. Chambers asserted that he would not interfere with the independent process. National Australia Bank said they will implement the Reserve Bank's latest rate rise of 0.25%, which will happen on the 12th of May, and that's off the back of the bank getting ready to announce its interim profits today. The bank has also raised its savings rate by the same amount, and the competition for home lending and deposits is expected to offset the benefits the banks are usually gaining from the Reserve Bank interest rate rises. Analysts are predicting that the upcoming results for NAB, ANZ, and Westpac will show that margins have already peaked, and following the Reserve Bank's decision to move the cash rate to 3.85% on Tuesday, all the banks are to follow suit by implementing the increase for borrowers, as well as seeking to counterbalance the dual challenges of highly competitive mortgages and deposit markets. Morgan Stanley analyst Richard Wilds noted that house lending competition pressures are likely to intensify, and deposit mix headwinds are accelerating, further increasing the funding costs for banks. This underscores the urgency for banks to pass on the increases to borrowers. And remember to like, share, and subscribe to stay informed with all the latest property and finance news. As the Reserve Bank rate hike decisions impact banks and borrowers alike, analysts are predicting that the intense competition for home loans and deposits will offset the potential benefits. As a result, it pays to review your mortgage and see where you're at, particularly given the increased competition between the banks could benefit you. Guys, get in touch with us here at Hunter Galloway. We're a mortgage broker. There's no cost for our service. We deal with people Australia-wide. So if you have a mortgage and you are starting to feel these rate rises take a bite, or your fixed rate's coming up soon, get in touch with us here at Hunter Galloway. Call us on 1300 088 065 or visit our website huntergalloway.com.au. Leave a comment down below. We'd love to hear your thoughts. Guys, as always, thanks for watching and we'll see you again soon.